Sensitivity analysis for capital budgeting. Sensitivity analysis is important for investors to determine on their capital budgeting whether or not to invest in this business. So what is sensitivity analysis? So businesses use different assumptions or estimates in a calculation to find out the impact on the project's finances. This includes quantitative and qualitative analysis. So calculations be made by changing the assumptions or estimates to obtain different results. So that will help for business to project the expected results, what is their targeted profit, whether they can achieve their targets. That this analysis is very useful for managers to make the decision on capital and equity and other resources to generate the profit. So what is capital budgeting? So after determination of the company's cost of capital, the company need to calculate the projected capital budgeting. So that means how much the funds need to be invested, and then that investment appraisal is very useful for investors to determine their funding requirement. The business can identify several capital budget projects. However, the business should identify the best capital budget to achieve targeted profit. The company's financial team should identify the best suited capital budget using SWOT analysis. That means strengths, weaknesses, opportunities, and threats. So the capital budgeting process involves five-stage process. How sensitivity analysis is used. So this can be used in various situations, including forecasting or predicting, as well as identifying where improvements or adjustments needed to made in a process. However, the use of historical data can sometimes lead to inaccurate results when forecasting, as past results may not necessarily lead to expected future outcomes always. So what is sensitivity analysis? The process of calculation of sensitivity analysis is consists of qualitative and quantitative analysis. So budgeting calculation sensitivity analysis changes one assumption or estimate at a time to see how the results change. A company can use sensitivity analysis to identify the inputs which have the biggest impact on the return on a company's investment. In this calculation, the company can use the profit calculation for different amount of investments. The input of investment with the highest amount of return should then be considered more carefully. So I have given an example with some numbers for you to understand this easily, how that sensitive analysis works and how the results can be used for capital budgeting. And the purpose of sensitivity analysis as a tool for capital budgeting. So this is a very useful tool when investors want to make a decision on their investing in the company. The business may not generate the targeted profit, but the assumption can be made based on the analysis. The sensitivity analysis helps investors to analyze the risk. All methods of capital budgeting involve making assumptions and estimates about the project's future performance. So instead of turning a profit in the second year of operations, for example, the business may only break even because of bad economic conditions. So for this analysis and this information, I have used below references. So you can use these books and the websites for further information on this analysis. Thank you.